Hello everyone, this is Martin. Welcome back to another weekly video update. We're going to be looking at trading opportunities for the week of February the 5th to the 9th, which is coming up. I'm recording this video on the weekend, so this is prior to the markets opening up on Sunday evening, and I'm also producing this video. I'm in the Eastern Standard Time Zone, which is Toronto, Canada, for those people that want to know where I am from. Anyways, learn to trade with Martin Easy Read charts. So everything that we're going to be taking a look at and the opportunities are going to be presented using my new Easy Read charts, which will help you to understand what's happening with the market conditions, whether you're in an uptrend, downtrend, sideways market, or whatever. So we're going to look at the charts in a second. Before we do that, I've got to mention the risk disclaimer. That's always important for the for you to understand. I produce these videos for educational purposes, even though I do present with you some pretty great trading ideas and the different price levels I'm looking at. I want you to understand that you are always viewing the video at your own risk. Take trades responsibly and always use proper risk management. Okay, that's why it's important to understand the risk disclaimer. Okay, we always start looking at the Euro USD chart. Now this is the daily. And you can see this is the price movement from this red vertical line here to the right side. So we have 5 days of last week's price movement. The first bright green candle that you see is Sunday and Monday trading combined. Then we got Tuesday, Wednesday, Thursday, and Friday of last week. Okay, so let's get started. And first of all, you can see we have long-term resistance right here. So price made right here, you can see price failed to make a higher high. Here's a previous high right there. Okay, previous high, so it failed to go higher, and we are in an uptrend. Now these easy read charts are really super simple to understand, and when you see green above blue, that means you're in an uptrend and you're only looking to do one thing. You're looking to either wait for a pullback and then a trend continuation to the upside. So in other words, pull back and then trade higher, okay, off a bounce, or a breakout. You're looking for a breakout. In this case, we're looking for a buy above 125.53 to the upside. And if you think price is going to go lower, then you could look at sells below 123.77. So that's the uptrend phase. Okay, now we move to the next chart, and we get to the British pound USD. You can see here, same thing, exactly like the euro. We're in an uptrend. We have green above blue. That means we're only looking for buy trades. We're not looking for sell trades at all. Okay, and if we think price is going to go higher, we want to look at a buy above 143.53, and if you think price is going to go lower, we want to sell below 140 or 140.57 here. Now we're in a pullback phase. When you see these green candles, see these are bright green, which means this is a strong momentum to the upside. Here we're pulling back. That's why the candles change to a darker green candles, which these are pullback candles. So you either want to wait for a bright green candle to the upside, or you want to wait for some bright pink candles like this color right here down below to the downside. Okay, and that's what the easy read charts tell you. Okay, now we move on to the next one, and that's usually the Australian USD, and there we go. Now last Friday we had the non-farm payroll, And the economic news, really, when you look at all these charts, you can go back again. You know, you can go back on this video, but all the major pairs, the U.S. dollar was free falling in weakness against the other major currencies, and on Friday we had a complete turnaround. The non-farm payroll news came out. It was really positive for the U.S. currency, and this could signal either a reversal. I mean, it is speculated that the U.S. will raise its interest rate in March, so there may be fuel to the fire here prior to March, and price now may really help the U.S. dollar. It's certainly bad news for the Australian dollar. You can see we had a huge, massive down day. I'm going to take my crosshair tool. Do you see that right here? Measuring from here down to here. Take a look at the middle number. You see 1191. Okay, that is 119 pips. You ignore the last digit, so price moved 119 pips to the downside, and wow, that's a pretty big drop. So my recommendation, usually after a huge long candle like this, I would wait for a bit of a pullback. Okay, I would wait for a pullback and then look for price to come back down again. And that's just because it's a big, huge candle. Now, waiting for a pullback and back down below 0.7963. Do you see this red arrow? So that, when you see that on the charts, that means I'm really waiting for a pullback and then a trend continuation to the downside play. You can see here, the blue MACD line, take a look down below, has not yet crossed the zero. So, I mean, from here, price could certainly bounce a little bit higher and go sideways before dropping down again. The Australian economy is not that good. Well, the news that's coming out is not that great. The U.S. news is much better. So my bias is to the downside, but again, just be a little bit cautious after this huge long candle. Now, to the upside, if you think price is going to go higher all the way from here, you could look at buys above 0.8062. Okay, now we move to the gold. I usually talk about gold right after the Australian dollar, and you can see gold did the same thing. It bounced down off of this. I had a resistance line drawn right here, so price did come back down. It certainly could come down a little bit lower, but basically it's going sideways. Take a look at the MACD line right here. You can see starting here, price is actually made. Starting here, price has actually gone higher. Okay, but the MACD has gone lower. So there's a divergence there, and I would expect price to come down a bit more. Although it may come down just a wee bit to perhaps this zone. Do you see that right there? Let me draw that. Price may just come here and then go back higher. Okay, so that is that. Let me just take that off, and let's go to the New Zealand US dollar. And here we had a gain on Friday, a huge bearish candle. You can see that. I'm expecting price to either bounce higher from here because we are in an uptrend, and the idea with these easy read charts is when you have green above blue, you're looking for a buy trade only unless there's evidence to the downside. Now, this is a special signal candle right here. It is a, you could consider it a signal candle to the downside. And but however, I've drawn a trend line. You can see that right here. So if you think price is going to go lower, you can certainly look at sells below 0.7274 or higher above 0.7435. By the way, this signal candle here, you could consider that as the Mo pivot reversal signal candle, although we've got a bit of a support area right there. Okay, so again, it's a big, huge, long candle. Normally, I would say perhaps take an aggressive trade entry at the open of the next candle here, and your stop would be just above here, above the signal count. However, there's two things. One, this is a very long, large candle, and I'm always cautious after that. And secondly, trading hasn't opened yet. I normally do not trade on the Sunday evening, Monday. I always wait to see what happens, but sometimes right off the get-go, with the start of the markets opening up on Sunday evening, we have a continuation of the previous candle. So price may certainly come back down. I mean, may go down a little bit lower and down to at least this area. But anyways, that's your calls. And again, I normally do not trade. I wait for the first candle to close Sunday, Monday. Now we move to the US CAD. Take a look at this reversal. Again, I'll bring my crosshair. This was a huge candle, about 100 and almost 60 pips, quite large. So again, I normally would not trade after a very large candle like that. I did draw a trend line, you can see here, joining the previous highs, and it did break that trend line. Again, this can be considered a Mo pivot reversal candle, and it normally is a pretty good candle to trade, except that we have a very long candle here, so I'm always a bit cautious. So in this case, notice I've got the arrow here. Okay, so there's two things you can do. One, if you trade now, remember your stop loss is way down here, so that's just too big of a stop loss. But if you're an aggressive trader, you could limit your stop to just right there underneath the 8 EMA. That would be a super aggressive stop. Your more of a conservative stop would be here. If you're looking to get in right away at the Sunday evening, and again, it may just continue going higher and then bounce a little bit lower. But you could also wait, and I've got this arrow here, and you know what that means, so you can wait for a bit of a pullback and wait for a trend continuation to the upside, lower and then above 123.73. You can look for that evidence on an intraday time period. In other words, if you're checking the your charts, let's say every hour or at least every 4 hours, this you may catch an early opportunity to get in, or really conservative, just perhaps look for a trade or buy above 124.44. Okay, let me take that off and let's get going to oil. I always talk about oil right after the US CAD, and again here you can see oil has been going sideways. I'm looking for kind of a breakout above 66.70. We are in a an uptrend. It's been a very long uptrend. Take a look all the way back here, and even further back to September of last year. But sooner or later, here this is called like an exhaustion area. Prices going sideways, and this is a pullback. Again, the green candles, and that's what the easy read charts tell you. The bright green means where the momentum is really strong to the upside. Take a look below. Bright green right here. The blue MACD line above the red line. We have a crossover right there. Okay, take a look. So that's an early warning that price may reverse. It did go higher. Price went higher, but the MACD is going down lower. So what does that mean? That's divergence, and you've got to be very cautious here. This could be an exhaustion area, and normally after exhaustion, you're waiting for either price to come down lower, and you see this right here? There's a previous swing low, so you could look at sells below this area, or high, or take a buy above this area right here, and that's why I've got the arrow there. So that is oil. Let's take all that off the chart. Let's get to the US Swiss franc. Now, this one, look at that, eh? I mean, this pair, okay, right from this area, this is a sideways market. This is what I call the momentum squeeze. That's in my new course and with these easy read charts. After a squeeze area like that, there's only two things that can happen. One, price goes up, price comes down. The MACD right here, you can see, is below the red line, below 0. So price is coming down. And once price came down, it formed the pink below blue. And what does that mean? We only look for sell trades, okay? And in a downtrend, we look for what's called a pullback. There's the pullback, and it's easy. The easy read charts show you that these are the dark red candles right here. Here's the bright pink. Dark red means pullback. Bright pink, the momentum is strong. Right here, we have pullback, okay? And so when you have pullbacks, you're either looking for, let me just take that off, looking for either a breakout, okay? That's in a pullback situation, you're looking for a trend continuation breakout, and you're looking for a specific candle. We have a signal called the momentum, or the conservative pullback trend continuation candle, which is that right there, okay? So it's very easy to spot. But we also have an aggressive pullback signal candle, which is right there, and so that's an earlier entry. You would have gotten in right there, and you would have made some pips. But anyways, I digress. So let's go back to the topic here. We're in a downtrend, pink below blue. If you think price is going to continue lower, take a sell below 0.9245, or to the upside. And on Friday, this was a reversal candle. First of all, take a look. This is bright pink. This is dark red, or dark. So that means it's a pullback candle. And again, if you're not sure, the easy read charts, with these charts, you can easily change the charts automatically to black and white. There you go. Okay, see how quick that was? So that's a reversal candle. I switched back, and I'm almost inclined to take a buy trade at the open of the next candle. I mean, that's how aggressive I would be. But again, you want to wait for clues. You want a price to close above this falling 8 EMA, and that's why you could look at buys above 0.9386 to the upside, or below 0.9245. Okay. Take a look down below. The blue MACD line has not yet crossed over the red. That's why caution. So price may still come down further. I've drawn in these blue lines as support levels. So price is right now bouncing higher. But will this continue? And again, you generally have to wait for confirmation. The confirmation is to wait for price to break above the 8 EMA. That's the first big clue, and then if that happens, then that's a signal. Okay, so let's move to the next one, the US Japanese yen. Let's take a look at this. We already had the cross. Price has already crossed up above the 8 EMA. You can see that right here. These are dark red candles, okay, which means pullback. So we're in a pullback situation. It's a downtrend because pink below blue, but we're pulling back. These candles show you it's a pullback. We have green here, and this is a signal candle right here. However, I've drawn in a trend line just to show you that this could be possible resistance. So I would wait for price to come above and break above here, above 110.53 to the upside. And again, if price reverses completely to the downside again, then you could look at sells below 108.43. Okay, now moving along, we've got the we've got the Euro British Pound. This one's kind of been just going sideways. Last week's video, I told you that there's caution because we have resistance just ahead, so I didn't even suggest a trade in last week's video. This week, though, we're looking either for a breakout to the upside, okay? So we're looking for price to break out to the upside or bounce off the trend line. I've drawn in the blue trend line, bounce to the downside again, okay? And so here, if we think price is going to go higher, Look at buys above 0.8888. If you think price is going to go lower, price would have to come all the way down below here, below 0.8676 for us to even think about a sell trade. Okay, and let me just take that off and take a look here. This is a pullback. We're still in a downtrend, right? It's not a strong downtrend because but we do have pink below blue. These are pullback candles. The blue MACD line has not yet crossed the 0 level, so the blue line has to cross above 0 for us to confirm an uptrend, and we're really looking for, like I said, a breakout above here if you want to be a safe trader. Right now we still should be looking at sell trades just because we have pink below blue. And notice we have the red dash line here. That's the 200 SMA. And we have a blue dash line. That's the 89. So lots of resistance ahead with the moving averages and the trend line. Okay, so again, you have to be cautious. You have to wait for more evidence. Now, what's after that? Then now we get to the Euro Japanese yen. Okay, take a look here. This one's a little bit more of a regular normal pattern. You know, price is making higher highs, right? Whoop, there we go, higher highs. It's kind of went sideways. And then all of a sudden on Thursday, last Thursday, we had a breakout. Like, take a look at that. So price actually broke. Boy, I can't draw. Let me just take that off again. Let's try my third attempt. Okay, sideways. There we go. Okay, so price broke out on Thursday with conviction. Price, and I would have immediately gotten in. Now take a look at this. Do you see this big, large blue arrow and a dot? That's called a Mo Boost. That's a special signal, and this signal candle is called the Mo Boost trend continuation. So take a look at that. I would have gotten in automatically right there because it already broke the previous high, right, with this candle, and you would have made some pips, even though not that many on Friday, because on Thursday it had already run up quite a bit. But that was a really safe entry, and also so that just showing you that these are all signals with the blue arrows. Okay, now there's another beautiful one right there. There's a color squeeze area getting in right there. Take a look at that. It's a Mo Boost trend continuation signal candle getting in right there, and you would have made all of that. Okay, so that's what the Easy Read charts are all about. And again, if you think price is going to go higher, look at buys above 137.54. Okay, so what's next? We're almost coming to the end of the Euro Audi, and again, this one I think was the biggest winner last week. This really just went crazy, and again, I want you to take a look. Let me just stretch that out a bit. Okay, take a look at this signal right here. Okay, so here we have what's called a Mo Boost reversal. Okay, and you could have gotten in right at the open of the next one, and you would have made quite a bit of pips, right? I mean, that was pretty awesome there. Now, the other thing is, let me just take that off. There is resistance right here. And for those people that are looking at support and resistance areas, okay, so there's, do you see it? This previous swing high, and finally we had a breakout. So you could always place a pending buy stop. If you know, you see this pattern here, price, okay, so we have a resistance here, a second retest of resistance here, so 1, 2 touches here. Price, though, the lows are getting higher and higher. There's a triangle squeeze. Okay, it's a squeeze. This is actually a momentum boost reversal signal that comes with the course and these Easy Read charts. These are plotted automatically on your charts, and guess what? Boom, you would have made quite a number of pips on that one. So let me take that off, and for this week we're looking at this. Because of this huge candle, this also hit another resistance area. I've drawn them with the blue horizontal lines. take a look, previous swing high. Okay, so that's a resistance area. Resistance here. Will price go higher? Well, price may go higher, and if it does, we could be looking at buys above 157.64. However, price may also come down in a pullback, right? Because price has gone. Look at this, 1, 2, 3 huge rocket candles. So price can't go up forever. It may come back down, just reverse a bit, and then look for a continuation to the upside, continuation above 156.44, and that's why I've got that arrow here. Whenever you see the arrow beside my level, we're waiting for price to come back down and then above the level here. Okay, so finally we've got one last pair, and that's the British pound, Japanese yen. Same thing here, pretty consistent. You know, price is made higher high. Here, price kind of just, with all these small tiny candles, there was really little or no momentum, and I'll tell you why. Tell you where to look. Take a look at this MACD, okay? And the Easy Read charts show you it's fairly easy to find a sideways market. When you see that MACD blue line and red line together, almost at zero and horizontal, that's a sideways market, guys. And when you see a sideways market, you're waiting for a breakout, either to the upside or to the downside. In this case, we have a breakout right here, and here's a beautiful pullback. Wow, look at that. That's a terrific pullback. I want to take that off because this candle right here, that's called an aggressive pullback candle right there. Okay, that's an aggressive. I would have gotten in right there. This is a signal that I teach you in the course. It's called an aggressive pullback, or the A pullback signal candle. Get in right there and you would have made these pips. Okay, so for this week, I'm looking at a continuation to the upside. And if you think price is going to go higher, look at buys above 156.73, okay, to the upside. I don't really have any recommendations to the downside. For the downside, price would have to come down below here, below this area right here, for us to perhaps consider sell trades. Okay, so that's what I've got. Let me just take that off and advance to the next chart, and I just want to show you something. Okay, so if you're interested in learning how to trade Forex with the Easy Read charts, well, send me an email, because I've got a free 26-page PDF. Just email me. My name is Martin at mskyj007@gmail.com. And if you're watching this video on YouTube, click on the subscribe button. You get all my future weekly videos. You can watch this on YouTube, and don't forget to like me as well. So take care, everyone. We'll see you again next week, and safe, happy trading. Bye for now.